and welcome everyone to this morning's market report brought to you on behalf of CommunityFT for CommunityFT members, in which, guys, we're going to take a look at some major movements potentially to come over the next 24 hours. But before we delve in to the content, let us take and embrace a quick risk warning. So if we can all familiarise ourselves with the information in front, engage as much as is possible, simply so that hereafter any decisions you make in your trading are of a fully informed nature. Okay. Let's take a look at some economies, the value of those economies as is reflected by their currencies. Okay. Let's also take a look then at some equities, and we'll take a look at 500 equities in a composite of the same as is represented by the S&P 500. So let us move to the platform now for an inspection of these asset classes. In front of us, everyone, we're looking at the daily chart, okay, of euro versus US dollar, and I want to just sketch in some key levels here, okay. Let me just adjust that slightly. Can everybody see what's being highlighted, if you will, here? What's being highlighted by these key levels, okay? What's being highlighted, guys? Well, effectively what we're seeing, okay, is the low prices moving downward with the same gradient. And the high prices moving downward, I should say, with the same gradient, and the low prices moving upward with the same gradient, okay? And recently we had a breach of that particular pattern. Can everybody see that just here? And that can be a key sign of where long positions are available for the trader. There's also confirmation though at this point, and the confirmation is as follows. In terms of the 55-day exponential moving average, or 100 in this case, the market breached the same, which could be a signal of a breakout. But there's a conflicting piece of information. And the conflicting piece of information would be as follows. That the stochastic oscillator is now showing an overbought signal on this particular trend. But the other idea is, okay, is that on the overall chart, the stochastic oscillator shows many levels that are false also. And the key is, how would one know which position to take? In other words, should one stay in this trend, or should one obey the signal of stochastic oscillator and exit, I should say. And one way to possibly get around that is to hedge positions. So you could be trading the overall trend on one account, and let's say with another account be trading perhaps the secondary trends via the stochastic oscillator. So either outcome, of course, then you're hedging your positions almost. Let's move on and take a look at the S&P 500, and let's sketch in some key lines here. Okay, let's sketch in some key lines. Let's actually zoom out and do that with more effect. Okay, so everybody notice what's happening here. Okay, there's been quite a significant breach, hasn't there, of the previous low support. Okay, and of course we have then what we call an ascending triangle, and the diagonal in the ascending triangles have been breached. Now, many traders would recognize this as a time to sell, okay, and of course a lot of indices are in a frenzy for various reasons at the moment. But the key idea here is, okay, how would one determine when to exit that position? Okay, and in order to do that, effectively you need to have some sort of strategy if you're trend trading in order to show you when a counter trend is developing, hence signifying a movement in the opposite direction. And that's what we commit ourselves here to, guys. It's trading in a long-term manner, minimizing risk, maximizing return, but effectively highlighting the key exit points. So if you have any further questions, please do not hesitate to get in touch. We welcome all inquiries. We'll speak to you soon. Have a great day, and as we say here, keep learning.